Hello, I'm Smudge.
And I'm Sketch.
Sketchy and I are going to...
Stop! My name is Sketch, not Sketchy.
Oh, sorry. I better not make that mistake again. Sketch and I are going to talk about Chapter 2, Module 1. Let's start with understanding what direct and indirect costs are. In a manufacturing environment, we have two types of production costs. Direct costs can be easily and conveniently traced to a unit of product. Some examples of direct costs would be materials and labor used to build a car.
Indirect costs are costs that cannot be easily and conveniently traced to a unit of product. An example might be the electricity bill for a production facility. We can't easily trace that cost to a specific item of production. These are often called common costs because they support a number of cost objects or things we are producing.
Now let's look at the three basic manufacturing costs found in most production environments. Hey Sketch, name one of the first things you're going to buy when you get that really cool job after college.
That's easy! A hot sports car that goes from 0 to 80 in 5 seconds. Not that I would ever do that.
How's this?
Yes! Perfect!
Manufacturing costs are usually grouped into three main categories. Direct materials, which are materials applied directly to the product.
For our car, that would consist of wheels, doors, windshield, seats, and so on. All materials that can be conveniently traced to the finished product are considered direct materials.
Direct labor, which is labor that can be easily traced to individual units of production.
And manufacturing overhead. These costs are all other costs incurred to make a product.
Another way to look at it is that manufacturing overhead includes all manufacturing costs except direct materials and direct labor. Manufacturing overhead costs cannot be easily traced to specific units produced. It's also called indirect manufacturing cost, factory overhead, and factory burden.
Manufacturing overhead can include indirect materials that are part of the finished product but cannot be easily traced to it. Examples of our sports car may be the paint or grease used on the various engine parts.
Manufacturing overhead can also include indirect labor costs that cannot be conveniently traced to the creation of products. Examples would include an assembly line supervisor or security guard wages. Neither of these can be easily tracked back to the production of a unit.
Other examples of manufacturing overhead that aren't either indirect materials or indirect labor include maintenance and repairs on production equipment, heat and light, property taxes, depreciation, and insurance on manufacturing facilities.
A manufacturing company incurs many other costs in addition to manufacturing costs. For financial reporting purposes, most of those other costs are typically classified as selling costs and administrative costs. These costs are also called selling, general, and administrative costs, or SG&A. Selling and administrative costs are incurred in both manufacturing and in merchandising companies.
Selling costs include all costs necessary to secure customer orders and get the finished product into the hands of the customer. These costs are also referred to as order getting and order filling cost. Examples of selling costs include advertising, shipping, sales travel, sales commissions, sales salaries, and cost of finished goods warehouses.
Administrative costs include all executive, organizational, and clerical costs associated with the general management of an organization. Examples of administrative costs would include executive compensation, general accounting, secretarial, public relations, and other similar costs involved in the overall general administration of the company as a whole. Let's look at product versus period costs. We can categorize these costs into two main groups.
Product costs include all the costs that are involved in acquiring a product or making a product. More specifically, it includes direct materials, direct labor, and manufacturing overhead.
Consistent with the matching principle, which states that we recognize all of the associated expenses in the period in which we recognize the revenue, product costs are recognized as expenses when the products are sold. This can result into a delay of one or more periods between the time in which the cost is incurred and when it appears as an expense on the income statement. A product we manufacture today may not be sold for several months. Product costs are captured through the use of various inventory accounts.
Period costs include all selling and administrative costs. These costs are expensed on the income statement in the period incurred. All selling and administrative costs are typically considered to be period costs.
The usual rules of accrual accounting apply to period costs. For example, administrative salary costs are incurred when they're earned by the employees and not necessarily when they're paid to the employees. Hey Sketch, which of the following costs would be considered a period rather than a product cost in a manufacturing company?
Well, if the cost is related to production, then it must be a product cost. And if it doesn't have anything to do with the production of an item, then it must be a period cost. So, since manufacturing equipment depreciation, direct materials cost, and electrical costs to light the production facility all relate to production in one way or the other, I'd say those are the production costs. And the property taxes on the corporate headquarters and the sales commissions must be period cost.
You are correct. Property taxes on corporate headquarters and sales commissions are both period costs. All the other costs are product costs. Two more cost categories are often used in discussions of manufacturing costs. Prime cost is the sum of direct materials cost and direct labor cost. Conversion cost is the sum of direct labor cost and manufacturing overhead costs. The term conversion cost is used to describe direct labor and manufacturing overhead because these are the costs incurred to convert materials into the finished product. So, do prime costs plus conversion costs equal total costs?
I don't think so, because direct labor is in both prime and conversion costs, so adding them together gives you something greater than total costs.
That's right. Prime costs include direct material and direct labor, and conversion costs include direct labor and manufacturing overhead. That's all for Chapter 2, Module 1. Hey Sketch, what do you think this lady's looking at?
I don't know, but she needs to get off the phone and watch where she's going.
Uh-oh, I think I know. Time to wrap it up. See ya, Sketch.